I'm Rosemary Miller here with Stephen Ehrlich, the director of Forbes Digital Assets, here to tell us more about it. Thank you so much for joining us today, Steve.
Thank you, Rosemary.
So, Steve, can you tell us what is Grayscale Bitcoin Trust?
So, Grayscale Bitcoin Trust is the world's largest digital asset investment vehicle. Right now, it houses about $16 billion worth of Bitcoin. It launched years ago as an easy way for regulated institutions and wealthy individuals to get exposure to the Bitcoin price without actually having to go through the hassle of buying and custodying the asset themselves. It's become a bit of an albatross, though, around the neck of Grayscale, which is the world's largest digital asset manager, because for years, the shares traded at a significant premium above the net asset value, the NAV of the Bitcoin that underlies each asset when eventually it gets turned over to the public markets. But over the last couple of years, it's reversed into a relatively sizable discount, bottoming out at about 50%, and right now it's trading at about 17% under NAV on OTC markets, and that's led to a lot of consternation among investors because the nature of the construct of GBTC as a closed-end trust means that there's no redemption mechanism where holders of these shares could theoretically go back to Grayscale, give them the shares, and ask for the Bitcoin back. That can happen in more traditional investment vehicles like an exchange-traded fund, an ETF, which is what Grayscale is trying to become. But right now, GBTC is kind of like Hotel California. You can check in, but you cannot check out.
So, Steve, why could this trust be so profitable for investors participating in it?
So, in the earlier days of the trust, it was extremely profitable and it was virtually a risk-free trade because rich investors, institutions, wealthy individuals could go to Grayscale, create these shares, and then after holding them for a period of 6 to 12 months, could sell them to retail markets at up to a 30% profit. And they could just kind of rinse and repeat that cycle over and over again. However, that trade kind of reversed itself back in 2021 when the premium switched to a discount. The main catalyst for this, I believe, is the creation of some spot Bitcoin ETFs in Canada. And there's not necessarily a direct causal link there, but ETFs, as we talked about a minute ago, are much more, I guess, investor friendly because they allow redemptions. So what that means is that if there's a big discount or a premium, arbitrageurs could come in and say, hey, look, there's a big discount, buy the shares and exchange them for the NAV. And the reverse could also be true if there's a premium. It's the equivalent of handing the U.S. Treasury 83 cents and getting a crisp dollar bill back. And in today's sort of investment marketplace, that's like anything else kind of seems anachronistic. So this trade, when it reversed itself, it was almost kind of named the widowmaker in crypto circles because a lot of companies actually went bankrupt when the GBTC trade reversed itself. And now we're in this interesting period where Grayscale is trying to convert GBTC into an ETF along with dozens of other ETF applications out there, trying to become the first to offer a spot ETF so that they can enable these redemptions. No GBT shares have been created for years because why would you create something that trades at a discount? And they're trying to do this as a way to sort of modernize their product, catch up with the rest of the world, and finally offer redemptions to investors that are kind of locked into this unprofitable trade. Yeah.
So let's switch gears a little bit and talk about the lawsuit between Grayscale and the SEC. On what grounds did Grayscale sue the regulators?
So Grayscale was not one of the first companies to try to create a spot Bitcoin ETF, or in this case, because they already had an existing product, convert GBTC into a spot ETF. They were kind of waiting until they felt the SEC was ready to sort of take that step. And they eventually, in 2021, they filed to convert GBTC into a spot ETF. And then in 2022, last year, that application was rejected for the same reasons that the SEC has rejected all of the 30 plus spot Bitcoin ETFs that have ever come before it. Basically, that the regulator is not comfortable that Grayscale and sort of the marketplaces that would actually list the shares would be able to protect investors from fraud and manipulation in the underlying spot market. Grayscale call it foul here. They call it hypocrisy here, because the SEC has allowed Bitcoin futures ETFs to trade. And the argument is that Bitcoin futures, these are essentially contracts where two parties agree to sell a certain amount of Bitcoin to each other for a certain price at a predetermined point in time, usually kind of like, at least in the US, they're monthly contracts. And what the Grayscale was saying, there's some more legal minutiae here that I won't get into, but basically what they're saying is that if the SEC is going to allow a futures ETF to trade, there is no reason why a spot ETF should not be allowed to trade as well, because just by the very definition of futures markets, their price, their performance, their legitimacy is based on the underlying spot market. And basically what Grayscale is saying is that, at least according to the Administrative Procedures Act, the SEC and any other regulator is required to treat like products alike under the law, and the SEC was not doing that. And Grayscale, and this is, I believe, very much an existential question for Grayscale. Their investors, many of which are angry. Some of them have sued for documents, have sued for data, have filed activist letters to try to force Grayscale to create redemptions before becoming an ETF. Grayscale, I think, felt some pressure, and they also, I think, felt that they were in the right, that they would sue the SEC in court, claiming that the SEC was not properly following the law with regards to their application.